All right, fam. So I'm glad we're all here tonight because I honestly just want to give you a real no fluff Forex guide. Everything you need to know to start and why this should matter to you, right? And this isn't about hype or gimmicks. It's literally all about building skill, freedom, and control over your money. So what we're gonna do right now is we're gonna dive in, right? And this is something that I believe that we can need to be exposed to. Foreign exchange, forex, crypto, all of these things, because I think it's gonna change the world. And I think that if we are stewards of it, it's gonna be great. So the first thing I'm gonna talk about is what is forex? Very simple. Forex literally is short for foreign exchange or FX, right? It's a global market, literally where currencies are traded. It's the largest financial market in the world, trading at about $7.5 trillion every single day, right? Liquid is crazy. It never sleeps. It runs about 24 hours, 5 days a week. And, that happens because of the overlapping sessions, the Asian session, the Europe session, the US session, the on and on and on and on, right? And when you trade the currencies, you're speculating that one currency will go up or down in relation to into the other. And that's the opportunity, right? Making an educated guess on whether or not one currency versus another will go up or down. Very simple. So, Amari, how much money do I really need to get started? You can literally start for as little as you want, right? You can start an account for $10, $50, $100, $200, however much you want. But what I would do first is I will open up a demo account where your risk is zero. It's like playing with Monopoly money. It's like you're practicing, right? You're practicing how to trade after you learn terminology, after you learn what trading is, after you learn what a stop loss, what a stop profit, support, resistance, how to enter a trade, how to exit a trade, how to take partial profit, so on and so forth, right? And once you get good at demo, practice money and trading without emotions, start small, $10, $20, or whatever your risk tolerance is, and then you build it up over a period of time. Now, mind you, you can lose in Forex, right? This is not a disclaimer. You can get rich in Forex, but you can also go broke in Forex, right? It's all about discipline, learning terminology, and having a long-term mindset. This is not a get rich quick, but this is a get rich, right? So pretty much, why are we trading Forex? So why Forex? You have 24/5 access. You can literally trade anytime you want. And if you're trading cryptocurrency, you can trade 24/7. It's extremely liquid, right? You have exits and entries on demand. There's flexibility when you trade. You can trade on the upside, you can trade on the downside. It just all depends on where you think the trend is going. Remember, the trend is your friend. And leverage, right? Smaller capital controls larger positions. So you can start with $100, but be trading at a $500 position, right? And that's like 1 to 500 leverage. Most foreign exchanges trade on 1 to 500, which means that you have more capacity on each trade, right? It's powerful, but you've got to respect it, right? So somebody says here, isn't leverage dangerous though? So I would say, yes, it is dangerous because it magnifies both wins and losses. So that's why we say keep your position sizes tiny, start conservative, right? And always use stop loss orders to protect yourself. Whenever you're entering a trade, you have to know when you're going to get out of the trade. It's not just good to get into a trade and set your goal, your target, your take profit. You got to set a stop loss, right? And the next thing I would say is, you got to know your basics. Before you click buy or sell, lock these in. Your currency pairs, right? What are your pips? It's the smallest price increments. What are your lot sizes? What are the spreads when you're trading? Right? What the leverage and margin? What is that? Where it allows you to control larger positions of capital. What is risk management? I would say limit each trade to 1 to 3% or less on your account. That's what I would do. Because even if you're 50-50 trading, if you are risking 1% and your risk to reward ratio is 1 to 2, 1 to 3, 1 to 4, 1 to 5, where you have a potential to earn 5 times as much and only lose this much, then you're always going to be in profit, right? And those are kind of your basics and your foundation. So somebody says here, how do I pick my first currency pair? Okay, so I would say start with like Euro USD or GBP USD. Euro USD moves slower. GBP USD doesn't move as fast, but it gives you more movement, right? And also they have low spreads and high liquidity. Low spreads means that when you enter the trade, it won't start at a negative, as much of a negative. Every trade starts at a negative, but not as low. Not as it'll go to $1 negative instead of $10 negative. It has lower spreads and very high liquidity, right? And I would say stick to one pair until you build consistency. Yeah, stick to one pair until you build consistency, or similar pairs, or pairs that reflect opposite of each other, right? And it hurts me to say this, but I will also say avoid, exotic pairs, like Bitcoin, or even gold, US 30, Nas 100, because those move very quick, and if you're not careful, you should have to calculate risk, how much it moves, how much the pip really is in those pairs. And so I would say, stick with the regular pairs. So when you're getting started, here's your step-by-step plan. Number one, you want to learn the basics. What is a demo account? What is a pips? What are pairs? What are time frames? Number two, you want to pick a broker. For me, I'm only trading on regulated brokers only because in my experience and a lot of my friends' experiences, when they've traded on unregulated brokers, there have been more of a chance to where when they run the money up, they're not able to get the money, right? That's not everybody's experience, but that is more likely to happen on an unregulated broker. That's why for me, I'm using regulated brokers only. And if you want to know what those regulated brokers are, go in the description below or wherever you see this video, click that link and go create your free account, right? So you're going to pick a broker, must be regulated, in my opinion, open up a demo account, and that broker must have, kind of tight spreads, right? So you want to open up a demo account, then a live account with small capital. Then you want to build a trading plan, right? Define your entry and exit size, stop loss, and your take profit. Then you want to trade in a demo, log everything. Then review and adjust, keep a journal, and refine it over time. System, discipline, repetition. That is the path to trading, right? So those are kind of the basics. Somebody has a question. What's the difference between demo and live trading? So when you're trading a demo account, it has zero emotional risk because it's paper money. So you can do whatever you want, right? If you lose money, you can replenish it. It's a practice account, but you got to be more disciplined, right? You have to treat it as if it's a live account and have emotions as if it's a live account, right? The live account brings the real stakes, right? There's really emotion involved, fear, greed, hesitation, revenge trading, right? So you want to treat your demo like your live account. Analyze your performance. What are you doing well? What are you not doing well? I have a friend who traded for 6 months straight demo, and about a couple months ago, they did $150,000 in 1 day trading, but they practiced for 6 months, right? So here are some of the common mistakes to avoid, y'all. If you can follow me, put a one in the chat. Put a one in the chat if you're following me so far. If this makes a little bit of sense to you. Okay. Cool. Right? So here are some common mistakes to avoid. Over leveraging, which means that you're risking way too much. Over trading. You're jumping in a trade without the proper setup, without the proper technological advances, right? Then you want to do then trading without a plan. There's no exit or enter strategy. Like, what is that? We've all been there though. And then ignoring the risk to reward. Aim for at least a 1-to-2 ratio. Why do you want to do that? Very simple. It's because you want to do that because what happens is, even if you go 50-50 trading, if you have a 2-to-1 ratio most times and you're going 50%, you're going to be a winning trader. Very simple. So if you avoid these mistakes, you've already separated yourself from the masses. Most people lose because they have no plan. Most people lose because they are over leveraging. Most people lose because they are over trading. Most people lose because they ignore the risk to reward ratio. All right. Somebody says here, how much can I realistically make per month? So I don't focus on money. I focus on percentages, and you want to focus on steady percentages. 5 to 10% monthly with strong compounding, because 5% is 5% on a $100 account or a $100,000 account, right? So the goal is not to get a better, higher percentage. The goal is to be more accurate trader, but get access to more money. Somebody who's doing 10% on a $10,000 account, $1,000. Well, if you do that same 10% on a $100,000 account, that's $10,000. Let's say you do 10% on a $500,000 account. It makes sense. It's $50,000. so on and so forth. So focus on percentages and not the dollar amount. And also your growth depends on the consistency plan and the risk control. Remember, it's not a sprint. It's a marathon. Literally, it's a marathon, a big marathon. And so this is kind of why Forex builds that financial independence piece. It's not about the money. The money is a result of these things: the discipline, sticking to your plan, the emotional control, managing fear and greed, decision making. Being able to make decisions under pressure based off what the market is telling you, right? And the freedom. You can trade anytime, anywhere, any place with anybody, aka yourself. And these aren't just market skills, like they're life skills. Trading literally teaches you life skills. So if you want to learn more, this is what you're gonna do. You're gonna join a structured course and mentorship. So for us, I have a free course and a free membership that you can use in order to trade. All free. All you gotta do is join it. You can see the brokers that we use in there. You can see what trades we're taking, what systems we're using, so on and so forth. You want to stay in a trading community, right? And also you want to read daily and practice continually. So for me, if you're watching this video, right, you're like, yo, Amari, I love this Forex video. I love what's happening right now. Like, I want to jump in. Well, literally, here's your homework. Pick a broker. The broker's in the description below. Join our chat, right? Join our chat. Boom. You're going to open up a demo account, pick one major pair, learn one simple strategy, take about 5 trades, log the results. When you enter, when you exit, why you enter, why you exit it, and then you can review your mistakes and wins. You stay consistent, you check back in, hit the group chat, hey, group chat, this is what I did, so on and so forth. So pretty much that right there is your starter guide to Forex, like no fluff, straight true. And if you're serious about growing further, like, I would say join into the community. Very simple. So that's it for today, y'all. I'm excited for dropping this video. It's lit. Let's go. And yeah, I'm excited. So just join the chat, join the group below, and we're gonna make more videos about trading, more videos about where we're going, more videos about how we're operating, and just more videos. So I'm excited. Y'all have a good night, and then also make sure you stay tuned in so you don't get tuned out. Like, subscribe, and share.